Hello and welcome to the Green Profit Academy Pros podcast. This show digs into the challenges in growing a lawn care and landscape business while maximizing your profit. I'm Christeen Era.
And I'm Steve Bousquet. We are the green industry experts in profit, growth, and leadership.
In today's episode, we're diving into a crucial topic for business owners called basis. But if you're unfamiliar with this term, I don't want you to worry because we have a guest today who's going to help us unpack this topic and dive into it so you have a better understanding of what basis is. So to help us understand this topic today, I am going to be introducing Mary Pierce. She is a CPA. She's also an experienced tax planning and financial advisor. So Mary's going to help us understand this and simplify it. So it's going to be an interesting topic that's not going to be overwhelming. So Mary, I want to welcome you and thank you for joining us today to talk about the topic of basis.
Thanks for having me.
So before we jump in, did you want to share a little bit about your background so our listeners can understand who you are, why you're an expert on this topic, and what you're going to be sharing today?
Sure. Well, as you mentioned, I'm a CPA. I'm a certified tax coach, which doesn't mean a whole lot to normal people, but it means that I've had extra training in tax planning and strategy that most CPAs don't get. So it helps me help my clients better. And I've been in this business longer than I'd care to share. Started out as a CPA, spent some time in the building and development industry, working with home builders. And now I have my own CPA firm that helps business owners keep more of what they make by giving them great tax strategy.
I love it. And I know some people that work with you, and I hear all kinds of really great things about how you help them save money or have even educated them when they're leveling up their business and they don't know what to do with the amount of money that they do have now that they've never had before. So, all right. So we're going to dive in and talk about, and I don't even know where to start, with this topic. So what would you say is kind of like the basics of a basis?
Okay. A basis is essentially the investment account that a shareholder has in what the IRS calls a pass-through entity, which is an S corporation or a partnership. So most of the basis rules that I'm going to talk about apply to S corporations. The rules are slightly different for partnerships, but there's more S corps out there. So I think I'm going to stick mostly to S corps for today.
Okay.
So it measures the shareholders' economic stake in the business, which controls how much they could withdraw tax-free and how much loss that they can deduct on their personal return if they do happen to have a loss.
So it's kind of like the bucket of, what's at in the end of the year, how much money has either gone through the business that kind of stayed in the business, or how much money went through the business that didn't stay in the business.
The bucket's a great word. I talk about it like that all the time. It starts with, there's things that add to the bucket and there are things that take out. So if you think of it as like a bucket of water, when you make your first investment, you're pouring water into it. So now you've got some water there. And if you're doing great, when you have a profit, you're adding more water. At that point, let's say you got a half full bucket. You can take out money in the form of distributions that are tax-free. The distribution part is tax-free. You're always going to pay tax on the income of the company. That's a kind of a given. But when you have positive basis, you can take money out without having any bad things happen to you.
Okay. And bad things meaning like having to pay excessive tax or higher rate of tax or double taxation is something that comes up that business owners are like, oh yeah, I think I got double taxed on that, or how do I avoid that? So, I hear this a lot when we're working with clients and we're talking about strategy and we coach on profit. in the company and looking at how can we generate more profit and really streamline the business so that way, it's more efficient, it generates more profit, so it can save profitability. But a lot of the business owners that we do start working with, they haven't been profitable, or maybe they're, just been in business for like 5 years and they're still kind of like in that habit of not having any money left at year end. So it's kind of, to write off on taxes and things like that. So I think this concept is, I love this topic, but it's something that a lot of business owners, I don't think, have an understanding of, because they're in that cycle of spend money to not have to pay money when it comes to end of year tax.
Right. And most people, when they think of taxes and if they have a loss, they think, oh, this is a good thing because that means I can use this loss. And that's one of the hardest things to have to tell people is if they're at a point where they don't have enough basis, they've had a loss, but for whatever reason, they were able to take some cash out of the company. And that puts them in a doubly bad situation because if your basis goes, well, technically your basis can never go below zero. So in this case, if we're talking about, the worst side of it, think of basis then as a hole that you've dug. By taking out too much money, you've dug a hole. You got to fill that hole. And anything you put in that hole to fill it is taxable one way or the other. It's either going to be profit that you always get taxed on or a contribution, but mostly it gets filled by saying this distribution should not have been taken. And I only mean that shouldn't have been taken in the IRS's point of view.
Mm-hmm.
That's when they make you pay taxes on it. I mean, there's a small consolation prize in that you pay capital gains rates, which are generally, at least at this point in time, pending legislation, lower than the regular income tax rate. But so you might be in a position where you have a loss and you took out money that is in excess of your basis. So you're paying tax on that. You also get stuck with when you do that, paying the tax on that distribution, you've only brought your basis to zero. So you still can't take your loss. Now, you don't lose it forever. It sits there and waits, but it means that year you feel completely screwed over because you're paying tax on the rest of your income that you thought your loss in your company would offset somewhat. And you're paying that capital gains tax on those distributions. The IRS calls them distributions in excess of basis. Big words for took too much money out.
You took too much money out. And I feel like this happened a lot during, the whole EIDL loan that happened. So that phase, and I've seen this happen in businesses where they took out an EIDL loan and then, and some of them even asked like, hey, should we do this? Right? Should we take out a loan? The EIDL loan was a very low interest bearing loan, which is phenomenal, right? But a lot of the businesses that did take it out, it was just like this huge amount of money that got dumped into the business because it went into the bank account and it wasn't always safeguarded, for the period of time. And so there was all this spend that was kind of happening.
Mm-hmm.
And now I've been seeing kind of the repercussions of this because all the money is gone.
Mm-hmm.
And I call it using your business as an ATM machine where you're just going in and spend. There's all this personal spend. There's, money that is more of a loan, like the EIDL loan, where those funds were used, just to like buy equipment or invest here or invest there. And then, the company still has this liability that they have to pay. And then they also have this huge hole that they dug.
Yes. And, even if I'm hoping that everyone used their EIDL funds the way they were supposed to. So what they were doing was paying the regular expenses of the business. So it meant that the revenue that was coming in, even if it wasn't where you wanted it to be, that was kind of like extra cash. And the business owner didn't realize that they were potentially creating this hole by maybe taking money out, because if things are slow or you're using that EIDL money to buy equipment, like you said, It could be that you need money at home. We get that, but that's why it's really important to talk to your tax advisor on a regular basis. Haha, accountant joke, sorry. But to talk to them regularly, not just after the end of the year when there's nothing you can do about it. Because I've had situations where I tell people, oh my gosh, not only do you have to pay this tax on your distributions, you also still can't take this loss because your basis is now just back to zero. And it's really demoralizing for business owners. So I'm trying to educate them to not get in this position, because sometimes there's different ways to handle taking money out of the business in legal ways that won't get you into this situation.
So what are some things, and many of our listeners, like, they're getting familiar or are already familiar with like their profit and loss statement and their balance sheet. So how could you explain, so if they're looking at their financials, how could you explain to somebody how the basis might show up on those reports or move through those reports?
Right. The hardest part about basis is that there is no line item on your balance sheet or your P&L that says basis. So it's harder to figure out. I can tell you this, if you see negative retained earnings, that would be a sign that, hey, before you take money out, talk to your CPA for sure. The basis calculation it doesn't always come out to be the same number as your owner's capital or your retained earnings. It's a separate calculation that your tax professional figures out every year based on what goes on, because there's non-deductible things that show up that, you can't take them on your tax return. So it won't even make that loss higher. But guess what? It reduces your basis. That's where it feels like the IRS is really just hitting you hard. They're usually not big numbers, but it is a reality. That's one of the things that reduces your basis. So in general, the way you figure basis is you start with the money you originally put in the company, add any profits, add any further contributions by the owner, and then what comes out are losses and distributions and those non-deductible expenses if you're looking at tax returns. So theoretically, you could keep track of that yourself, but tax preparers generally do that for you. And I will say, if your tax return does not have a copy of your basis schedule in it, ask your accountant. Chances are, I would hope that they're doing it. If they're not, maybe talk to somebody else. But even when they are, sometimes they think you don't care and they don't put it in there. You should definitely ask for that so that you know.
And what's going to show up on that basis schedule? Like, what does it look like?
It starts with the balance at the beginning of the year, which, in the case we were talking about where somebody had negative, it actually wouldn't say negative. It'd be zero because we actually made it zero by having you pay tax. It shows the profits that go in, and there's different categories. Interest income shows separately. Some other things show separately, but it shows all those things that come into your taxable income as adding to your basis, shows those non-deductible expenses as coming out, and comes up with a number. So let's say started at 100, had 50,000 in profit. Your basis is now at 150,000. Then it takes your distributions. Let's say in this case, you took 200,000 out. It's going to show negative 50.
Okay.
It's not, and then it's going to show, oops, pay tax on this 50,000, that extra 50, and then you'll be back at zero.
Okay. So when you say take money out, we're not talking about like an owner being on payroll. We're talking about the additional funds that they're taking out of the business that didn't go through a paycheck. So a distribution to the owner.
Sometimes people call them owner draws, owner distributions. Yes. Every S corporation owner should be on payroll with a reasonable salary. And that can be a whole other discussion about doing that. It's definitely something it's a red flag. The IRS is actually putting more resources to check on that. So if you're not getting a salary, talk to your tax professional.
Yeah, there's several businesses I know that show up at Core where we sit down and talk with them, and they're at a certain revenue level and they're not on payroll and they're not set up as an S corporation either. So,
Interesting.
they're like an LLC, a limited liability company, and they're not even looking at, and I ask them, I say, hey, so I go, have you talked to your CPA about this? And because you're at this revenue level, and they're like, well, yeah, but they told me I really don't have to worry about it because I have so much losses in the company. So, and then I have to talk to them about, well, you're here to work with us to not have those losses in the company. Right. So, we really need to kind of strategize around this. But I see it a lot to where, different companies will show up at those revenue levels where they really should be on, receiving a paycheck and be in the right entity structure.
Right. And S corporations, it's absolutely a rule. It's part of the Internal Revenue Code that you have to pay a reasonable salary. Some of the other entities, you don't actually pay a salary. There's lots of different ways to do it, but it's very important, especially if you're an S corporation owner, to pay yourself a salary. They want their withholding tax, and they're going to get it one way or the other. And you don't want them taken out of your personal bank account.
So with the financial statements I was talking about, saying like, how does the basis show up on this? We have a profit and loss statement where revenue comes in. That revenue is going to pay the costs of goods sold. So kind of, those variable expenses. It's going to then pay the fixed expenses of the business, like the rent and the utilities and all of those things, your administrative staff, people who aren't producing the revenue. And then at the end of that, it shows a net profit, typically a net profit, because at the end of the profit and loss statement, we always say those funds have a job to do, right? People look at their P&L and they're going, where's all that money? And it's like, so at the end of the profit and loss statement, that's not the money that then gets, just walks into the owner's bank account and, sets up camp, right? So, which would be really nice, looking at some profit and loss statements. But the job that it has to do is it has to then go over to the balance sheet, and it's going to find its home on the balance sheet. So depending on the company's, liabilities that they have to pay, that could either set into a bank account. So some of those funds are going to be sitting in a bank account, which those are assets. Mm-hmm. And then some of them are then some of those funds are going to go do their job of paying the liabilities or the lease payments or the loan payments or credit card payments. So some of them will go, find their home there, which they don't stay long because that all goes out, right? Paying that debt. And then it goes down, to the equity of the company. So it calculates out, well, how much did the owner take out of the company? How much is left? And this is usually, as I'm understanding, kind of like where the basis kind of starts to shake out, depending on what happens with the money that kind of moves through that balance sheet. Mm-hmm. And how much is left after it's done moving through that balance sheet to say, hey, this is how much funds are actually still here. And these are how much funds you actually took out of the business.
Right. And, it won't be an exactly perfect number, but if you look at your owner's capital and your owner's distribution and retained earnings accounts together, that's a good rough number, so that, if they're all negative, talk to somebody. If they're positive, you should probably still talk to somebody to know how much you can take out. But that's a much better indicator that you're going in the right direction.
Yeah. And especially if you're implementing profit first in your business, one of the things that happens is you take that distribution, that quarterly distribution. And when you do take that distribution out, it can create a negative impact, if the company doesn't have enough money at that point, where it's like you overspent or you took too much out, it's going to create a basis issue.
Right. And that's where sometimes, especially if folks who follow the profit first method, they set aside money for taxes and they use that to pay their taxes, which is great. That's exactly what we want it to do. We want the business to cover that.
Mm-hmm.
But if you've also taken out other distributions, those are distributions too, when the company pays the IRS for you. So it's just another thing. Sometimes that doesn't always register that, oh, this is a distribution too, but it is.
Core Growth Strategies provides business growth management solutions through cloud accounting, bookkeeping, and strategic business consulting programs. Our team works with small businesses in lawn care and landscape and trade industries throughout the U.S. We increase our clients' business acumen by creating business performance transparency through financials and strategic advisement based on industry best practices and benchmarks. Our experienced team provides support, guidance, and coaching, thereby allowing our clients to connect with viable data and discover their own solutions. Core Growth Strategies programs and services are designed to get your business from where it is now to where you have always dreamed it to be. Visit us today at coregrowthstrategies.com and follow us on Facebook, Instagram, or LinkedIn. Don't miss our exclusive limited time podcast special. Just mention promo code GPA Pro to any member of our team during your complimentary consultation, or enter the promo code on our site when you sign up for one of our online programs. That's promo code GPA Pro. Yes. Yeah, that is one of the things where, looking at the whole system, I think if you have a financial background, it automatically kind of registers to where you're like, okay, this much supports the owner is the methodology. I believe it's 35%, right? When it comes to profit, owner's contribution or owner's distribution, owner's pay, and then the tax portion. And so really, if you're looking at it from that perspective, you're pulling 35% out of the business to put in your pocket.
And if you haven't actually made a net profit of 35%, if you start at zero and if you don't make that 35%, that's where you can run into trouble. So it's good to be talking to your cash flow strategist, your profit first professional too, about let's make sure we do this the right way.
Right.
And move the money so that you don't make things worse.
Right. Yeah. And I see that happening where the other percentages in the profit first cash flow management, they're falling short and not being met.
Mm-hmm.
So they're plugging those gaps with loans and other, cash that they get from somewhere else. So some sort of line of credit that they're charging things on, stuff like that. So which is why it's important, when you're implementing the system, to make sure that all the cash that comes into the business serves the need of the business, including the distribution to the owner and the profit that you want to keep in the company.
Mm-hmm. Definitely.
So what are some things for people who are listening and kind of, picking up this whole concept of like, okay, the money comes in the business, this is what it serves, this is what's left over, kind of getting, how basis works. What are some of the tax issues that could come up or challenges that you have worked through or that you find when the basis is impacting the year end?
The biggest one is what feels like double taxation to the business owner. And it really isn't, but I totally understand why it feels that way. Wait, I have a loss and I have to pay tax and I can't take the loss? That feels like I'm just getting slapped twice.
Mm-hmm. And I've been there. I've been in that situation where
Me too.
I'm like, this is you don't even want to know, like, what the heck? So yeah, it does. It feels like you're not like getting anywhere and, you're getting screwed from both sides.
Yeah. And, sometimes I've seen happen sometimes is somebody will have a great year. Like let's just say in 2024, they had a great year. So they owe a fair amount of tax. There's money in the tax account. It gets distributed by paying the IRS. And then the next year, if they have a crappy year, then it can, if they don't pay attention during that next year about what they take out other than their tax payments, then they could be in that negative situation. And I had a client that I had to explain, he'd never had to worry about that before. But because he had a big bill, and the real problem was that we paid all his taxes out of the company when all of the liability didn't really come from the company. That's where the disconnect was. We took a big IRA distribution, had a big tax bill, and the company paid for it. So it was great that the company had the money set aside, but then he had a temporary situation, because he is profitable in general, that we had to really pay attention to. That's when basis is positive, it's no big deal. And you're probably not even going to talk to your tax professional about it. They'll mention it at the end of the year. Hey, your basis is here. It ended up here. You took X out of your distributions and you're fine. It's only when you get to that not so fun situation that you have to talk about it. There are some strategies that are probably beyond the scope of this discussion, of things you could do, but they have to be done with all the T's crossed and the I's dotted. So I don't want to just say, hey, go do this, because I don't want anybody to misunderstand. You definitely need to talk to somebody who knows the law.
So are there some examples that you can kind of just give us some ideas on, like, what some of those strategies, like what you might entertain, or, kind of like the very top line of what that might look like? Or, if somebody was looking at that or wanting to even talk to their CPA about this kind of stuff, like what could they mention, I guess? Like, hey, I need to talk to you about this because I was listening to this podcast and
do I have negative basis? I need to know. Sometimes people don't even notice it coming in. They might have other things happening on their capital gains schedule and they don't even realize there's $10,000 of income that they didn't realize was coming in. One of the things that you can do, if you do it properly, the company can make a loan to the owner for some of the money that got taken out, but it has to be a legitimate loan. It has to be documented. That there has to be an intent to repay it. You have to charge interest on it. So it's not just, I can just move this over here. That's not kosher. The other thing
that would be something that would be more like, we call situations trends or events, right? Is this right? So when something's trending in the business and it's a continuous problem where there's not enough money and enough profit, we don't want to implement a loan situation because the company just isn't making enough money and the owner wants to avoid tax. But if it's an event like your client you were sharing had kind of like a thing that came up and that happened that wasn't common in that one year, they've never really had this problem, that could be a good solution to work through. But it all has to be legit.
Absolutely. Okay. I mean, the other thing that you can do, which is often not really feasible, is put money back into the company before the end of the year. Make a capital contribution. You can even do it if you make a loan. Again, it has to be legitimate, documented, etc. But you can make a loan to the company, and that can be considered part of your basis. There are some nuances to that too, about when it gets paid back that you might be paying gain on it. So obviously your best bet is to not get in the situation, but sometimes things happen. Like you say, the events we can work around. Trends need a different kind of intervention of why you need to not do this anymore. I had a couple of clients who were consistently in that, and I finally said very strongly, stop taking distributions. If you really feel you need that money in your household, you have to increase your salary.
Yeah.
Which will increase the loss that you can't take, but it's better than continually going in negative.
Because you're getting taxed at a different rate on what you're taking out versus on your salary.
Right. And I will say that taxing it as capital gain is one of the cheaper ways to get things taxed. So sometimes, I mean, I had one client where we said, okay, what if they put money back in the company so that there is no, well, then all of their income for the year would be taxed at ordinary rates, which was like 25% in that case. If we left it with the negative basis, they paid 10% on some of it and they're 25% on the other. So it actually saved them tax money to allow the system to work the way the IRS wants, where you pay the tax. Mm-hmm. So it's kind of interesting that sometimes that works out. The problem is that it doesn't feel good to the business owner. It just doesn't feel good.
Yeah. Oh, yeah. I mean, anytime where you're like, what do you mean? Like I have to pay extra tax? Or, what do you mean I can't take a distribution because I'm going to get, taxed at this rate? It's very hard to understand.
It really is. And most people who have their own businesses, they work really hard, and it's hard you feel like I've worked hard. I deserve this. I've earned it. I've busted my butt. And you're telling me I can't have it? Well, that stinks.
Right. Or I can have it and I'm going to get penalized for taking it.
You can have it, but you're going to get a little slap on the hand.
Right. Yeah. That is frustrating. So this is where, if this is something that's happening, or even if you feel like you're paying a lot more tax than you should, working with a strategist, and having those conversations is going to help you better understand, the choices you have, because we all have a choice, right? It's like at the end of the year, if we're having those conversations, we can make choices throughout the year, on what the outcome is going to be at the end of the year, and just being a lot more, hands-on about it and having decisions versus after the fact. I would assume there's not a lot of decisions or choices that they have once the year closes. They've already taken all this money and now it's time, to come to the table and pay your taxes. There's very little strategy that sounds like could be implemented to get around this.
Yeah, that's true. And that's why our clients who are on our partner plans that meet with us during the year, it allows us to kind of monitor that and say, whoa. You're in a loss situation. Let's talk about taking money out. And for the most part, when we put it that way, I want to save you some money or avoid this situation or let you know it's going to happen so that you're aware. And they appreciate that. If it's after the year end, there's very little, as you said, there's very little we can do. And that's true of anything. I've had clients sell their business and not tell me till after.
Yeah.
Makes me cry.
They have to pay more tax on what they sold it for.
Yes, way too much.
It's painful.
Yes.
So on the flip side, I want to kind of walk our audience through what does it look like for somebody who has basis. And I know we've worked with clients, you and I together, to where, we've looked at their financials and we're like, dang,
woo-hoo!
like this person, like they could throw a party, which is very exciting for them because there's so much more opportunity, around strategizing and investment and just, really building that financial wealth. But, talk to us about that. So it's like, when you really kind of get over that hump and you're creating that profitability in the business and you've got things really dialed in, the benefit of having and building basis.
So yes, it's really nice when somebody has a successful business and they have either because the business has been so successful that there's a ton of profit that has gotten added into this bucket over the years and they haven't needed to take it out. I've seen people with millions of dollars in that basis account. What that means is, as you said before, choices. Let's say they decide they want to buy a house, buy an investment property, invest in something. I'm presuming the company should have something approaching to what your basis has in cash accounts. So the business, a successful business usually has the cash. So let's just assume that. They can take, if their basis is $1 million, they can take $1 million out of the company and not pay tax on it. That's
That
the
is
beauty of positive basis.
okay.
That's where we
So
all
it's
want to be.
something over time. I almost look at it as like it's that hidden piggy bank
Mhm.
where, we're well behaved, we're running our business the way that we should. We're not using it as an ATM machine, taking out all this money. We're really being efficient and not kind of tossing it aside going, I don't have time to manage my business financially. I don't have time to look at, my numbers. I don't have time to go have those conversations with these employees who are wasting money or whatever that is. It's all that really good, behavior and attention to detail that's being spent. And over a period of time, and it doesn't have to be that long because I've seen this happen, over a 5-year period of time to where they could have enough money in their company that they could go take out and, like you said, just like go buy a house.
Right.
And not be taxed on it.
Yes. That they could, they can also decide to go buy a different kind of business and they don't want their business to invest in it, but they can do it personally. I mean, it gives them so many choices. They can do whatever they want. Or they can leave it in there. And then that just means they're investing in the growth of their current company.
Mm-hmm.
But you definitely want to be there.
And I know you and I have even had conversations, because we'll bounce things off of each other. And let's just unpack like a strategy that, and we talked about this recently with one of your clients, to where there's only so much capacity that they were identifying within, their work days. And so we talked through some strategies to where they could generate more revenue in the business by making a few small adjustments in their business model without really creating much of an additional cost. The only additional cost that they were going to have really is labor and, to service outside those business hours, which in turn increases the capacity in the business to deliver services, increases that revenue opportunity, and then therefore creates that higher profit in the company, which then will contribute to that basis in the business.
For sure.
Yeah. So there's a lot of things that I'm hearing to where if a company does have a negative basis and they discover this and they're looking at, what do I do about it? It's not just about the current cash flow. It's not just about, what they're currently doing. It's really looking at the opportunities to, strategically change some things in the business and create, that space to generate more revenue or even streamline the operation so the company could generate more revenue at a higher profitability.
Yes. Because, I mean, the positive side of that whole negative basis thing is that it does take you back to zero at the end of the year. So you're kind of starting with a clean slate. And if you can add profit into it the next year, then those losses that we had been saying over and over, you can't take it, you can't take it.
Mm-hmm.
When you get a positive basis, you can start having profits without paying tax on them because you do have those losses sitting over here waiting to be used. So that's another thing that it's good to remind somebody of, when we're talking strategy and they're in that situation and it's not fun, you can say, but there's a light at the end of the tunnel and it's not a train. It's actually something good. When you make money in 2025, you're not going to pay tax on it. If we manage your basis.
Right. Yeah. I like that outcome. So what are some mistakes that our listeners could avoid that, could contribute to this basis issue?
I think the biggest thing would be being aware. Make sure even if this didn't explain enough, talk to your tax professional and ask them to explain it until you get it. And if they say it in accountantese or whatever, and it doesn't make sense, keep asking questions. Pay attention to, once you know that number in a year, if you know you started at, let's make it easy, 0, and you're seeing a profit on your books, but it's $10,000, don't take more than 10,000 out as a distribution. You don't have to be a tax professional and know it down to the penny to be able to say, I can keep my eye on this and not do things that are going to hurt me. So I think awareness is probably the number one thing.
Yeah. So just watching it, getting a hold of your cash flow, and having the conversations with the people that you are working with, or if you're not, find someone that you can work with to have those conversations with, and, kind of keep that temperature check going on your profitability in your company and what you're taking out.
Yeah. I would say most tax professionals would be thrilled to talk to you about it, because they just think no one wants to hear, like, oh, they don't get it. They would love to talk to you about it.
Yeah. Yeah, I'm sure. I would say, I would absolutely have to agree with you, is it's really easy to assume that our clients do not want to hear when we talk shop, our shop version
Right.
of the industry and the strategies around it. And I would say the other thing, and this is very common, is we forget the knowledge that we have and how valuable it is, and who doesn't also have that knowledge. Just to us, it becomes common knowledge, and to other people, they're like, this, wow, I didn't know that. That was, that's amazing. Like, tell me more about that.
That's very true. We forget what we know. We forget that we know it, and not everybody does.
Yeah. Yeah. And that they actually might want to know it. Like, it might be important to them, or just understanding the basic concept of something. So when you're trying to support them on it, they understand why you're trying to support them on this. So
Right.
I think that's important too.
Yeah. You certainly don't have to learn the tax code. You just need to have enough knowledge to make yourself feel like you understand it, and talk to your pro.
So that would be an actionable strategy, is to talk to a tax professional about this. Is there any other strategies and action steps that you could give our audience for them to move towards that, good basis and getting their head wrapped around it?
Work on your profitability so that you don't have to think about this. And that makes it a lot easier to manage. That's definitely the first step. Is you definitely don't want to be in a position where you're losing money, but you're taking money out of the company. So if you see a loss on your profit and loss statement, please don't take more money out of the company. It's going to hurt you.
Yeah, I think that's a good place to just start. And then you can start addressing the lack of profit in your company to increase, the profit. So you're not then paying and digging yourself further into the hole.
Right. Even if you've got cash, if you don't have profit, you're going to dig that hole. So.
Yeah. And I think that's another issue, is that we see business owners where over the years, they do have cash in their business. They do have a nice little, profit hold account, or, vault of money that's saved for that rainy day or something like that. So, they're looking at it and they're like, well, I'm kind of in a pickle. Like, I can really use this right now. But there's strategies on how to use it and when to use it. So then you're not paying more than you really want to,
Right.
And you're creating opportunity in the future if you have a strategy that you can work through and not having to pay more tax.
Exactly.
Yeah. And I mean, it's safeguarding your money, really. It's being smart about it. Okay. So if someone wants to reach out to you and have a conversation about this, or even, see how you might be able to work with them or help with them, or if they're even, curious of going like, well, I'm not really working with somebody right now, so I need to understand what's my basis? What's the best way for them to get a hold of you, and in what ways could you help them?
Sure. The best way, I would say, let's start with an email. You can send it to mine, but a better email address would be hello@pierce.cpa, and note that it's CPA, not com. So it's pierce.cpa. And then we would talk. We currently kind of specialize in working with business owners and their owners. I'm sorry, business owners and their companies. If you just have a W-2, you don't have a basis problem. So don't worry about it. We can start with taking a look at what you have and whether we think that we can help you. And if we don't, or you might need help, but not at the level that we normally work with folks, we can find somebody or refer you to somebody who could help you.
Yes. Excellent. Because I would say we do have a nice little network of professionals that we do work with. And we know at the level to where you would be very well taken care of. If we're not a fit, then we're likely to know someone who is a fit.
Exactly.
All right. Is there any last things you'd like to share with our audience before we tie up today?
Don't dig yourself a hole. I hope this helped.
All right. Thanks, Mary. I love this topic, and I hope that this really helped our audience today get a better understanding of not just like their financials, but how the cash works in their business and how it serves them when it comes time to file and pay your taxes. And just getting a new concept to your head wrapped around this, I wouldn't say new concept, but for you, it might be, new. I know at one point it was for me. So just, touching on another strategy in business and understanding, what is your basis and how can you best navigate it?
Thanks for listening to the Green Profit Academy Pros Podcast,
the show that digs into the challenges of growing a lawn care and landscape business while maximizing your profit.